Hello there, welcome to David's Investment Analysis channel. It's been a week since I posted my first video on Aritzia, and thank you to those who have watched and supported me. And if you haven't yet, I've linked it in the description below. Aritzia just reported their Q4 fiscal 2020 results on May 28, 2020, and the day after it was very volatile, which was yesterday. It dropped to as low as $17.02, which is about a 5.4% drop, and increasing to as high as $18.30, which is about a 1.7% upside. So that was a very wide range in a day. And so what happened? What do I do now? So that's why I'm here today to digest the Q4 fiscal 2020 results. I will go in-depth analysis on the Q4 results, including their earnings call, and share some of my opinions. I will then conclude in summary of the results, including my opinion, and where do I see the stock going forward. If you would like to skip out the analysis and go straight to the conclusion, I provided a timestamp in the description below. And if you haven't yet, please like, share, and subscribe. The next video I'll be working on is related to a stock that I see a lot of potential in the short term. And if you do not want to miss that, please click the bell notification after subscribing. So I'll be reading through the press release and then providing some of my opinions as we go along. Aritzia Inc. is a vertically integrated, innovative design house and in-store and online fashion boutique. Today announced financial results for the fourth quarter of fiscal 2020 ended March 1st, 2020. So this is before their closure of their boutique stores, so these results should not be materially impacted by the global health issue. In addition, the company provided an update on recent developments related to the global health issue and preliminary results for the first quarter of fiscal 2021. So this would be the interesting thing that I'm going to be paying more attention to. Our financial results for the fourth quarter and full year fiscal 2020 demonstrated the strength of our business model and the affinity of our brand. Towards the end of February, we began to see the impact of global health issue on our business. So this does confirm that only towards the end of February where they began to see an impact on their business. We took immediate action to drive revenue in our e-commerce channel and manage expenditures to enhance our liquidity and maintain our strong financial position. As a result of these efforts, our e-commerce revenue growth since our boutique closures has been in excess of 150% compared to last year. 150% increase in the e-commerce revenue from last year is amazing numbers. We expect to end the first quarter in a solid cash position, said Brian Hills. So this continues to speak about the strength of the balance sheet. We plan to have approximately 30 of our boutiques reopened by May 31st, 2020, the end of the first quarter. These combined strengths give us confidence that we will emerge from this challenging period in a position to capitalize on significant growth opportunities ahead. So this is kind of good news. They are starting to open the stores, but just note that 30 boutiques out of 97 boutiques is about 30%. So there is still about 70% of the stores closed. Financial results for the fourth quarter. Comparable sales growth was 8.9%, the 22nd consecutive quarter of positive growth. I expect this will no longer be the case. They did provide some guidance on the Q1. Net revenue increased by 6.3% or 11.6% excluding the 53rd week last year to $275.4 million from Q4 last year with positive performance across all geographic and all channels. Adjusted net income per diluted share remained flat at 21 cents per share compared to Q4 last year. Cash and cash equivalent at the end of Q4 total $117.8 million compared to $100.9 million in the end of Q4 last year. So a reminder, this is March 1st, 2020, before the global health issue. Gross profit increased by 9.6% to $102.8 million, excluding the impact of IFRS 16. Gross profit increased by 3.5% to $97.1 million compared to $93.8 million in the fourth quarter last year. Gross profit margin excluding the impact of IFRS 16 decreased 90 basis points to 35.3% compared to 36.2% in the fourth quarter last year. The decrease in gross profit margin was primarily due to the ongoing higher raw material costs and the impact of the new tariffs, higher markdowns, and higher warehousing and distribution center costs. These factors were partially offset by the appreciation of the Canadian dollar. Selling, general, and administrative expenses increased by 8.4% to $64.3 million, excluding the impact of IFRS 16. SG&A expense were $64.5 million, an increase of 8.6% or 23.4% of net revenue compared to $59.3 million or 22.9% of net revenue in the fourth quarter last year. The increase of 50 basis points is primarily due to $2 million of investments in the company's customer program. It'll be interesting to see how Aritzia can benefit from this. Inventory at the end of the fourth quarter was $94 million compared to $112 million at the end of fourth quarter last year. The decrease reflects a lower initial buy for the spring and summer season and early receipt of inventory last year. Inventory at the end of the fourth quarter represented a decrease of 16.2% year over year. This appears to be positive. Like I said in the first video, inventory management is very important for a retail store. Financial results for the fiscal 2020 year. Net revenue increased by 12.2% to $980.6 million from $874.3 million in the prior year. Excluding the 53rd week for the fiscal 2019, net revenue increased by 13.7%. Comparable sales growth of 7.6% was driven by momentum in the company's e-commerce business as well as positive performance across the company's boutique network. The increase in net revenue was also driven by the revenue from new, expanded, and repositioned boutiques. Adjusted net income per diluted share increased by 7.4% to 87 cents from 81 cents in the prior year. This is in line with analyst expectations. So here's the important part. Concurrently, Aritzia took swift action to enhance its short-term liquidity and protect its cash position. The measures included drawing down $100 million of its revolving credit facility to enhance its short-term liquidity. They did have $175 million as discussed in the first video. Suspending share repurchase under the NCIB, leveraging applicable government business support programs, delaying capital expenditures related to boutique construction, accelerating infrastructure investments related to e-commerce and omni-channel projects, reducing and or limiting any outstanding spring-summer orders to optimize inventory levels, driving cost reductions by minimizing non-essential operating costs and ongoing negotiations with suppliers, vendors, and landlords for concessions, extending payment terms where possible, and temporarily reducing compensation for senior leadership team by 25% and a forfeiture by the board of directors on cash portion of their fees. To date, Aritzia has not laid off or furloughed any of its employees due to the global health issue. The company will, however, pursue a right-sizing of its infrastructure once clarity on the new normal emerges. Aritzia expects to have reopened approximately 30 of its 96 boutiques by May 31st, 2020, and this is actively preparing for the reopening of the remainder of the retail boutiques as conditions permit in the coming weeks. While initial results from the reopening process are encouraging in light of the current environment, the company expects an extended ramp to a new normal. Outlook. So this is very, very important. The first quarter fiscal 2021 net revenues are anticipated to be in the range of $105 million to $110 million. This is weaker than analyst expectations average of $116 million. Aritzia currently expects an adjusted EBITDA loss in the range of $24 to $28 million in the first quarter fiscal 2021. This reflects a deleverage from the occupancy costs and other fixed costs. In addition, the success of the company's online sales events resulted in higher markdowns and increased warehouse and distribution costs. These numbers are pretty terrible in my opinion. The EBITDA is earnings before interest, tax, depreciation, and amortization. The EBITDA per share will be approximately a loss of 21 cents per share. The net earnings will be definitely lower. As of May 27, 2020, Aritzia's net cash and cash equivalents total $102 million, excluding the $100 million fully drawn from its revolving credit facility. The company is pleased with its current inventory position due to the strength of its e-commerce channel, the sell-through of marked-down products through the first quarter, the volume from planned boutique reopenings, its ability to shift non-seasonal product into the fall, as well as reductions to its fall and winter orders. In addition to the opening of MacArthur Glen in British Columbia on May 27, 2020, Aritzia currently expects to open 5 to 6 new boutiques and reposition 3 to 4 existing locations during the remainder of fiscal 2021. However, the company anticipates there could be delays subject to market conditions. This is quite interesting. They opened a store just a few days ago, which is positive, and they're looking forward to continue to grow and capitalize on growth. Aritzia is withdrawing its performance targets for fiscal 2021 and will not be providing annual guidance at this time. This is not new. Many companies are doing this, and I think it's prudent that management don't mislead investors, so I think this is positive. Earnings call is when management discusses its results and answer any questions analysts have. And I've picked up some very interesting points that I've highlighted here. Since early April, all of the partner factories have largely returned to normal business operations, suggesting low risk of supply chain disruptions. So this is very positive. As I mentioned in the first video, I was a little bit concerned about their supply chain, but however, this is very positive, knowing that there won't be or very limited disruptions going forward. The CEO is very confident in the business being able to get through the global health issue and become even stronger, capitalizing on opportunities. I do think this is very positive. The management do see that they have a strong balance sheet and be able to capitalize on opportunities. Prioritizing investment in digital selling tools. They are already seeing some encouraging early results. The CEO said that the stores are very productive, even if the new normal isn't the same level as before. They are still extremely profitable stores. Don't plan on closing any stores and will continue to invest in e-commerce. This is very, very positive. I think this suggests how profitable the companies are and how much traffic they had previously. Even whenever that new norm is, they don't foresee that they would close any stores. So this is really good news. The CFO said that he sees a lot of pressures on gross profit in Q1 and Q2, but do expect Q3 and Q4 to be better. The CFO said that the selling general administrative expense will continue to have higher costs from warehousing and increased labor, but they are receiving approximately $6 million each month that Aritzia qualifies from both Canadian and US government. This was booked against SG&A labor. There were several occasions discussing how happy they are with their inventory level. Like mentioned in the first video, inventory management is very, very important, and it's really good to see that they've been able to manage their inventory well. There were many occasions within the earnings call that they talked about the uncertainty of how things will turn out and when things will be new normal, and that they will have far more clarity on their next earnings call. So I am looking forward to that. In conclusion, so here's a summary of what I picked up from the earnings call and the financial results. And here are some positives. 150% increase in e-commerce in Q1 of fiscal 2021 compared to the prior year quarter. Planning to open 5 to 6 new stores in 2021 fiscal year, but this suggests it depends on market conditions. So having that flexibility is really positive as well. CEO expects their boutiques to be profitable when business is in its new normal and do not intend to close any stores. They are planning to continue to grow and invest in e-commerce. They have great inventory management and cost reductions. They have a great balance sheet with the ability to capitalize on future opportunities. No more supply chain disruptions. They are starting to reopen stores slowly and carefully, and by end of May 2020, they will have 30 out of the 97 stores open. And here are some negatives. Q4 fiscal 20 results, they've slightly missed on the revenue, but did meet on the EPS per share. Full year fiscal 20 results, they've met on both revenue and EPS per share. Q1 fiscal 2021 outlook, 105 to 110 million in net revenues. This is a decrease of approximately 45%. EBITDA loss of 24 to 28 million. This suggests about a 25 cents per share loss. There has been consistent discussion about the pressure on gross profit due to costs related to global health issue and the changing environment. There's also a lot of uncertainty on the impact of the global health issue on Aritzia, and hopefully to provide more clarity in the next quarter earnings. So what do I think? So the Aritzia stock is up about 9% since I posted my first video on Aritzia. I believe that there's still some upside, but I believe that will be limited in the short term until there's more clarity on its business and the future. But I think long-term investors should look beyond the short-term issues. If history is indicative of future performance, I believe they can come out stronger from the global health issue. But be prepared, as there is a lot of uncertainty. And I do look forward to hearing from them on the Q1 fiscal 21 results to provide more clarity to get an idea of where things are going. Disclosure, I do own a little bit of this stock and it's about 2% of my portfolio. I do intend on adding to this position if it drops significantly. Otherwise, I would just hang on and wait till next quarter results to get more clarity. And that's it for now. And if you haven't yet, please like, share, and subscribe. The next video I'll be working on is related to a stock that I see a lot of potential in the short term. And if you do not want to miss that, please click the bell notification after subscribing. Thank you for watching, and until then, see you next time.